So what's very clear is there is a democratization of capital. We are seeing major changes to the way people borrow and lend and invest and share their money, where cash sits and where equity sits. And what I'd like to do today is really back up to the very top of this concept of crowdfunding. Crowdfunding is not new. In the 17th century, it was used to fund books in the very early days of publishing. And in 1884, they needed to raise money for the pedestal of the Statue of Liberty. And crowdfunding, or crowdsourcing, was used to raise that money in the early days. The word crowdfunding is also synonymously used with crowdfinancing, equity crowdfunding, crowdsource fundraising, and crowdsourcing. Essentially, they're the same thing. It's small contributions from many. It's this collective network. The difference is today, we're using the internet. There are literally hundreds, if not multiple hundreds, crowdfunding sites in one way or the other. They include all kinds of different activities. We talked about some of the businesses and other ways crowdfunding is helping, but it's really helping with disaster relief and charity and civic and community-oriented projects. And it's not just for business startups, it's for business growth and business acceleration. Crowdfunding is very wide. One of the things we didn't talk about here today is when. We talked about why and how not to crowdfund. If here's the beginning of the idea, and here is the delivery of the product, where that bullseye sits is where crowdfunding should be. Not too early and not too late. We often see crowdfunding happen way too early and sometimes too late. It really is in that 10 to 25% of the time range from the business idea or the money needing idea to the end. So there's really 4 different crowdfunding models. We touched on some of these today. I'd like to try to wrap them up and then talk about the 5th model, which is some hybrid of the first 4. You all now know about debt-based crowdfunding. There are 2 companies in this country, Lending Club and Prosper, doing hundreds of millions of dollars a month in helping consumers crowdfund on a debt basis where people or institutions lend money and they get a return, not of equity, not fame, but principal and interest. That is debt crowdfunding. The second one is equity-based crowdfunding, which really was the focus here today, where people are investing or lending in the return for equity that hopefully goes up, or some dividend, and maybe some kind of gift. The third one is profit sharing. So you will get X% or X dollars or X rate over a hurdle rate of the profits of the company. And the fourth one is a gift or virtual thanks or some kind of mention in the credits. I'm a huge proponent of equity and debt crowdfunding. I've been doing it personally since 2011, and my son raised a lot of money to film his dream documentary in Costa Rica. And that film is now on the way to the film festivals around the country. I saw the coolest kayak I had ever seen. And I asked the guy, where did that come from? I'd never seen it. He crowdfunded a new kayak company, and his gift was the 5th prototype of the kayak. These are the main 4 ways, the main models of crowdfunding. And the last one could just be some combination of the first 4 above, but it's usually 1, 2, 3, or 4. There's 3 different approaches to crowdfunding. Some of it was touched upon today. The first way is all or nothing. The money is only collected if the target dollar amount is met. This is true for equity crowdfunding and for debt crowdfunding. In the debt crowdfunding world, when borrowers come up, if 70% of the dollars that they're requesting aren't raised, the loan dies. Sometimes it's 100. This is true in all or nothing. Sometimes there's a hurdle. In the middle one, it's keep it all. The funds are kept no matter how much is raised. So in the debt funding world, if you want 10,000, if 1,000 is raised, the loan happens. The same can be true in the equity crowdfunding sector. And the third one is a bounty. And we see lots of bounty platforms that are getting fees upon funds collected or the success of the project. Lots of benefits to crowdfunding, lots of debate today about the challenges. We have an obligation as an industry to get this right. There is going to be loss. We hope there's not going to be too much fraud. We need to, as an industry, follow the rules, follow best practices, and make sure we're communicating with all of our regulators. Whoever determines what regulation is, we need to be very proactive. This is not up for debate. We've got to get this right, because if and when there are problems, it's going to affect the whole industry. And what's clear, that there are too many crowdsourcing, crowdfunding platforms today. Not so much on the debt side, because there's only 2, but there are over 100 equity crowdfunding sites. We're going to need to figure out who the winners are, make sure we get the regulation right, set best practices, self-regulate, and then communicate these standards throughout the world. If we don't get this right early, and there are some major blow-ups along the way, it's not going to be good for the crowdfunding industry. So here are some of the crowdfunding platforms that have come up from 2001. It's not just in the United States, that was talked about earlier. There are other countries, Finland, Canada, Italy, and more. I think this next picture is the picture that will change the most. Where? So there's a guy in Germany rolling out a crowdfunding site in 20 different countries. So we're going to need to, not only in our country, get crowdfunding right, but create this global platform of standards that work. How does FX, foreign exchange and currency, debt transfer, equity transfer, payment transfer, how do we work this out as an industry? It's early. We've got to work together. The competition for crowdfunding wasn't here today. It's really against the old brick and mortar establishments of how business and money was raised. So again, more collaboration and more communication among the crowdfunding entities can only add to the success of the crowdfunding industry. So why is it that crowdfunding is growing so fast today, both debt and equity? It's human nature. People really do want to help. They want to help businesses, they want to help charities, and the democratization of capital and the internet have really helped people share and do more for social and do more for goodwill. It's okay to fail, and you can fail in a small way in a crowdfunding situation, whether it's a business idea or a movie or some other way you're raising money. Crowdfunding gives people the opportunity to fail in a small way, instead of historically failures happened in much bigger ways. And there are so many creative ideas and projects and unbelievable concepts that are coming up through these crowdfunding sites. If you haven't signed on to PAVE or some of the other different groups, it is absolutely fascinating to see these people, young, middle-aged, older people, with this one chance in their life to tell their story, to tell their dream, to tell their idea, and watch it get funded and watch it start to happen. And the other reason it's happening so much, it's easy. You can crowdfund at night, in your pajamas, at home, at the airport on a Wi-Fi. It's easy. You don't have to drive somewhere and talk to a banker and talk to a venture capitalist. There are 2 sites. You can have your own crowdfunding opportunity up on the web in 24 hours. You're in control, it's fully hosted. It's easy and quick to do it. The media is all over the concept of crowdfunding. I can't watch a news show, an internet page, a newspaper without some major publication or some reporter referencing crowdfunding. Yes, the Jobs Act and the SEC has been talked about enough today. Once it's approved and once we figure out what the rules of the road are, it's off the charts. So here's the term RESET, reset. This is probably the most important slide, the most important topic that I'd like to talk about today. At Prosper, we are a debt crowdfunding company. We all must be very proactive in a regulatory environment and work closely. Go visit your regulatory agency. Tell them what you're doing, tell them what you're not doing, Make sure it's very clear, and if there's a problem, fix it. Education. This whole crowdfunding thing is only going to work if both sides win. The lender and the borrower. The business person and the investor. The movie and the people putting up capital. There has to be something in it for both sides. And education, we've got to better articulate the benefits for both sides and the marketplace. We have looked at purchasing other crowdfunding sites, a lot of them. And the issue here is scale. Can these different groups, and many of them were discussed here today, get enough deals at the right revenue model? So many crowdfunding sites get a percent on success over the life of the deal. Can you get enough companies in? Can you get enough investors in? And is that revenue really enough to scale that crowdfunding site and the people and the technology that's required to grow that business? Most of the groups we've talked to don't have scale, don't have a pathway to scale, and aren't going to make it. So as businesses, as crowdfunding portals, we really need to determine how do we reduce our cost to acquire businesses or students or movies or borrowers, and how do we efficiently get retail lenders and institutional lenders to cross and be balanced. We can't have too many movie makers and not enough lenders into movies, and we can't have too many lenders without enough people who want to make movies. Borrowers and lenders, businesses, investors. It's like a teeter-totter. In crowdfunding, we need that teeter-totter to be as flat as possible. So there's a nice flow and a nice balance in crowdfunding between the opportunity, the borrowers, the movie, the business, and the lender, both retail and institutional. And efficiency. Once you've determined the game and the program, how do you continue to lower the cost to acquire, lower your cost of capital, and actually get them to meet in the middle? So having a bunch of kids who come up with a movie idea and funding a little bit but not getting enough, you lose that efficiency. You've got to get to the point where they come on and they come off and they get funded. There's a natural amount in crowdfunding that won't fund businesses, movies, borrowers, but to decrease that rate of failure and increase the rate of efficiency, it's called the activation rate. So the acquisition rate to get the deal, the activation rate to get them to go, and then the servicing and collections. That's all baked into efficiency. And the last point, the T, is this is a technology game. This is a FinTech, financial and technology business. Without technology, crowdfunding will not work. So to get it right, to get it set up on the right technology platform, to get it to scale, to get it to go multi-currency, to get it to go multi-country, and to get it to go multi-asset class is the key. So to me, RESET is the main takeaway from what I would like to talk about for crowdfunding. So where are we going to go from here? Ever since I put Crowdfunding East up on my LinkedIn site, I've received lots of emails and lots of calls from people, and I've put up some of their ideas. What is the future for crowdfunding? Nobody knows, but a few people think we're going to have 1 or 2 or 3 umbrellas over the top of our industry, where you can do equity crowdfunding, debt crowdfunding, securitized with collateral crowdfunding, all kind of different ways where there's an umbrella. You come into each of the different sites instead of having to go to one of the 50 or 100 different sites. As crowdfunding solutions, we must go mobile. It's clearly the future of the way e-commerce is going to work. Could crowdfunding really be the future of small business funding? It might be. I just went through the venture capital rounds in January, where we raised capital to purchase Prosper. It's not easy. It takes a lot of work. I think crowdfunding has the opportunity to be the future, or a big part of the future, of small business funding. Crowdfunding is really reducing that need to call friends and family, have your parents or the country club going around asking for money. It's really becoming a new way. I saw this in my son's own attempt and success in raising money for his video. He got lots of money from lots of people around the country and around the world. It was really fascinating how it reduced his needs to go to friends and family. So crowdfunding and non-banks like Mint and Prosper and Lending Club are among these dozens of new companies really changing the way capital sits at banks, maybe not anymore, and people borrow money, and people invest and lend. This is really different. It's really changing the balance of power between the traditional incumbent banks and venture capital and private equity firms and our ability through crowdfunding and technology to connect companies, borrowers, ideas, and capital. The need to get this foreign currency exchange is going to be critical. I'm not sure if it's going to be Bitcoin or rubles or one of these other ways, but we have to find a way to make crowdfunding multi-currency. And we need to open this up. Just like Salesforce.com and Apple created app stores, each of our platforms, have to be open with open APIs, sharing the data, so other smart developers and other smart groups build applications that tie in, and we, the crowdfunding exchanges, become the big data like the Apple Store and have all of these apps around us. That's how the exchange, literally the trading exchange of crowdfunding, goes from here. Some people say we're in the first inning. I'm going to call it the top of the second inning. It's early. I've never been more optimistic about crowdfunding, both equity and debt. And I think once the regulatory rules are set, the floodgates will open, the number of deals and opportunity to invest in, and the efficiency to find retail and institutional capital will be off the charts. So I thank you very much for the opportunity to close today's conference.